It's October, and we have another market update for you here for the Austin area. My name is David Shapiro with my colleague Lee Abraham, and a lot of people expressing concern to us over what's going on in the real estate market, thinking that things aren't looking good and that prices have to go down further. So that's not what we're seeing. Inventory is still extremely low. Most people have a 3% mortgage and they don't want to sell. So there's not that many homes available right now. And overall, we're seeing a lot of stability in the market. So we're going to go through the stats so you can see that more. So diving right in, here we show the number of active listings. And you can see over time, going back to January of last year, when it was still that crazy seller's market. And you can see, obviously, inventory ticked up pretty fast with interest rates going into that summer. And then we've seen some stability right around this 2,500 to 2,700 homes on the market.
So, David, as we're looking at those 2,600 some odd homes that are currently available, one of the things we look at is the monthly housing inventory. And so you can see the past 30-day pending sales at the bottom of that little chart on the left. There were 661 pending sales over the past 30 days. When you divide that number of pending sales into 2,657 active listings, you get just over a 4-month inventory. And so as we look across the past 12 months, average about the same number of sales per month, but then some real fluctuation. The past 3 months, it was up over 700 per month average, and then the past month of closed sales, under 600. So a little bit of an uptick over the past 30 days, but we're going to see as we parse through some of the numbers. I have a concern, I mentioned it last month, that the number of sales is weak. We know that, and we're going to break that down a little bit and talk about what that means relative to the supply side and the overall monthly housing inventory. From this view, basically stable.
So here's that number charted over time. So you can see the chart looks somewhat similar to the number of listings. And, we've seen some stability. It's ticking up slowly, but, we still consider that stability.
And so the point there is that the number of sales per month is way down. And so now we're beginning to peel away the layers of the onion in terms of this supply-demand dynamic. And this is where I have the concern that I mentioned last month. We've had, as we'll see, relatively weak growth on the listing side, even month-to-month decreases in the number of new listings hitting the market. That bodes well when you've got declining sales. That's why your monthly housing inventory stays relatively stable. If those active listings go in the other direction, now you're going to see the monthly housing inventory grow rapidly. This 591 closed sales, as I look back, you're basically looking at the same sort of numbers in January and February, which are traditionally the slowest months of the year. So again, a little bit of a red flag here, David. I want to see those numbers go up a little bit, even as we head into the fourth quarter.
And, probably interest rates, which we'll talk about towards the end, right?
Yeah.
So they ticked up a little bit,
Yeah.
and, consumers already feeling the pinch there. So any uptick in interest rates is going to dissuade some of those buyers from making a deal. And then we have the average sales pricing. Now, this is pretty interesting. Something that Lee predicted months back was that we would actually see an increase year over year. And here we have it. So last year in September, the average price for a single family home within the city limits was $781,000, and now it's over $790,000. So we see an uptick year over year. And if you look back over previous years, it's actually a nice trend continually up. When we're looking at the month of September, at least some volatility between that, seasonality. That's why we always look at year over year to look at the same month of the previous year, because there is seasonality. And we're down a little bit from last month, down 0.3% month to month. So interesting, big news here. Now we've got an 820,000 comp in October. Things do tend to pick up a little bit in the early fall, right before the holidays hit, and then back to lower comps for November, December. So we'll see kind of where we end the year, but this is going back to that stability. We've seen some up 5%, down 5% year over year. Going back to last, when was it when we saw that? But I think it was last November. You can see here it was up, But anyways, yeah, bottom line is we're seeing stability.
So now we take a look at days to sell, and the trend had been on the lower side in terms of dropping from a high of, say, 72, then into the 40s, and then actually into the high 30s. And over the past 2 months, that trend has reversed. Days on market has gone up. We're more looking at the month-to-month rather than the year-over-year. The 35 days in 2022 was still a holdover from the white-hot sellers market that we had. Long as we're under 90 days, David, that's really where we start to get a little nervous about what days on market's telling us from a demand standpoint. 54, reasonably healthy, nothing to be overly concerned about here.
Number of new listings, so down 15%, and this is what we were talking about earlier, saying that the ratio of listings to pending sales is, we're still in stability, but if this doesn't continue to go down, right, if it ticks up and sales stay down, that's where there could be an issue, and we'll see rising inventory at a much faster rate. But just less people putting houses on the market, for whatever reason that is.
The key point that you touched on is you get over that point where it begins to impact prices and equity. So that monthly housing inventory really does become relevant when the velocity kicks up as active new listings are hitting the market much faster than they're coming off the market. We haven't seen that yet. That's the stability, as you said, that we've been referring to. And now the sale price list price ratio, my gosh, this is the poster child, David, of stability. However you slice up the fractions, it's 97%. Which is healthy. It's not 111% like it was when things were nuts. 97% is fine. Looks like that number's not going anywhere anytime soon.
And then our listing inventory barometer. So this is the most real-time stat. And just to give you a quick review, the 100% line is what we're looking at here. So any of these bars that are above that line means that we have more inventory being added to the market than there are sales. And below that line means that sales are outpacing new listings. And so over here on the chart, you can see the number of new listings, the number of pending sales, and the percentage. And so for this last week, 208 new listings, 149 sales. So that's 140%. So continually, you can see going back to January, we've been pretty consistently, fully consistently above the 100% mark and building inventory. So it's a long period that we've been building inventory. And if you think back to our early slides showing the number of months of inventory, it hasn't gone up drastically like it had from early 2022 to mid 2022. It's been very stable.
David, two things that jumped out at me as we continue to dwell on these numbers month after month and try to track changes. What do they mean? Pointed out last month, the pending sales over the prior 4 weeks have been right at 150 or less. A couple weeks ago it was 170. But again, this is just another way of looking at what we were talking about earlier. I want to see those numbers go up. If I'm on the sidelines cheering for the equity holders in the game, I want that number to be going up. Because it makes us vulnerable to increases in listings and value slipping when you've got that anemic sort of sales activity.
Then here we show the interest rates. So this is pulled from Freddie Mac. There's lots of different places you can pull numbers, but we want to just be consistent and show one different place that we can look at. 7.3%, up 0.12% from a week ago. Although I think it's interesting, a year ago, we're only up 0.61. So in the big scheme of things, that's not a huge jump compared to what it would have been from that point to the year prior. And here's the 52-week range. So we're at the height of interest rates.
Right. And so this might be interesting from a couple of angles, looking at the trend up a little bit. We know that there's likely going to be another federal funds rate increase potentially yet still this year. What is that going to mean to the interest rates? We talked about it before. When is the right time to buy? Sometime between now and when the rates start coming down.
All right, so that was talking about within the city limits, and what we're doing is we're breaking out the suburbs. So often you'll see the Austin metro area and the city limits, and that kind of skews the numbers for the metro area because you have the city in there.
Well, here we have more active listings outside the city, as you're looking at basically the 5-county area. 8,067 listings. I like to look at the past 30-day pending, 1,755. That translates to about a 4.6-month inventory. About a half month, same pattern that we've seen for the bulk of the year, David. The outlying areas are about a half a month slower inventory than in town, and these numbers are consistent with that observation.
And then we have the number of sales per month. So also down outside the city, 31% year over year. So, but a bigger change and certainly bigger month to month. So, feeling the pinch here as we get into September, or as we're entering October, looking back at September, and definitely a bigger change than what we saw. Look at August; it was almost flat, and so big change coming into September from last year.
Yeah, you could look back to maybe 2018 for the closest corollary to what we've seen here. And again, for those equity holders, homeowners, property owners, we want to see those numbers come up even just a bit as we get into the fourth quarter. So average sale price, not as rosy a picture as in town, but not too bad. We have year over year down just about 3%, which was within our forecasted range. Up month over month, about the same amount. So you balance those out, and you've got stability.
And then days on market, so we're up 100% year over year. So, and then month to month up 8.5%. But at 64, we saw this trending up. It was at to 74 in March, and we were starting to get concerned if that trend continued. But it's come back down, and it's within range. So everything's looking good there.
And then new listings, again, as long as new listings are sliding while home sales are sliding, you're going to have stability in the values. They're both going down roughly about the same, more or less. That's the dynamic that we're tracking. So from a basic trend standpoint, the decrease in new listings outside the city limits is good for you if you own a home. If you're in the market right now, there are some really great deals out there, and we'll talk more about that as we wrap up. But take a look at what we had, over the past couple years versus where we're at now with the number of listings. And it's just a good time to be out there as a buyer because there's more to choose from in terms of the lifestyle that you're looking for.
Yeah, and especially in the suburbs. I mean, the difference between new listings and pending sales activity in the city was a much smaller delta than here, where we've got number of sales per month down 31% year over year and number of new listings down 5%. So that's why there's a decrease in price here, whereas there's an increase within the city limits.
And so the sale price list price ratio, again, right at about 97%. A little bit on the higher side. So are they more realistic in listing homes on the list price out in the 5 counties? Just too close to call. It's a basic overall market sentiment that's strong, and I like it. I like the stability. Well, people always want to understand the market, what's happening, and when you have a life cycle event that puts you in a position to buy or sell property, the timing of the market is not even a question. You have to do what you have to do in the time frame that makes sense for your life. Right now, we've got a number of clients that are coming back into the market from an investment standpoint, that are looking to take advantage on the commercial real estate side of some opportunities to buy. We have investors that are looking to do some buy and hold strategies on residential. So if you've been waiting on the sidelines as an investor, I like what I see in terms of the supply-demand dynamic. And for folks that are buying for their life cycle events, That's always a matter of striking the best bargain with the one seller that you'll be negotiating with. We're not buying stocks and bonds where the pricing is uniform. So more supply from the buyer standpoint from either side, David, and I think some good opportunities for all our buyer clients.
Yeah, and then on the seller side, I mean, there's buyers still out there. So, for example, we have a spec build, so which is a home we're building new and just on speculation that we were going to sell it when it's ready, and that's going to be done here in the next 2 months, let's say. Timing of that seasonality is not ideal to be coming ready during the holidays, as well as we wish there was more activity, but it's going to be ready. It's a really beautiful home, and there very well could be a buyer just looking for that home. Buyers enter the market every day, coming to us and saying, and to other real estate agents across the city saying, okay, you know what, it's time for me to buy. And they get out there and start looking. So you just never know when that buyer is going to present itself. So strategy there is make sure that we're staged properly, the home is prepped, everything looks good, high quality marketing, and we put it out there for people to see. And when the right buyer comes along, whether that takes 30 days or 60 days, 90 days, the home will be available. And we're not going to think too much about trying to time it perfectly. And I think, for any seller, it's like you said about lifestyle. Like if your lifestyle dictates that it's time to sell or buy for that matter, don't really try to get too caught up in the timing. And I think that's where people have a really hard time. They're like, well, I think prices are going to drop. As soon as those words come out of your mouth, you're trying to time the market, which is never a good move. So you might try to time the market and miss it, which is most likely what's going to happen. So if for your lifestyle, it's the right time to buy, then let's focus on that. And this is a good market for buyers to be aggressive. For sellers, also you can, in some situations, hold your ground pretty well. There's not that many listings, so we just be strategic depending on your situation. So I think that's the key. So if you're interested, go down to the description, schedule a call with us. We'll be happy to hop on a call and talk strategy for your situation and see what makes the most sense for you. Or go ahead and shoot us an email, text, whatever works best for you. If you got a lot of this video, please go ahead and share it with a friend, give it a like, and subscribe to the channel so we can see you on the next video. Thanks for joining us, everybody.